How's everybody doing today? Welcome back to another episode of the Banker Next Door. I am your host, Dr. Joe Berquist. Today, I've got a great one for everybody today. This is, I don't know if everybody remembers the soap opera Days of Our Lives, and it used to start with the little hourglass, and it's like sands through the hourglass, so are the days of our lives. Well, Republic First Bank, which is located over in New Jersey. They have this just insane banking soap opera that has been going on over there. So I call this as the Republic First turns. So before I get in and share some articles here with you, and I'll just bring this up just so I'll kind of get this. But we have there's a whole crazy backstory that goes into this. I mean, I could spend literally an hour trying to explain all this, but I'll kind of go back to this. So you had a very well-known banker in the local area and even nationally in some respect, a gentleman named Vernon Hill, who had started a bank called Commerce Bank, and then he kind of left there on very acrimonious terms, and then he went over to London and started a bank called Metro Bank, and then he kind of had to leave Metro Bank on very acrimonious terms, and now then he came back to basically the U.S. and he had kind of Metro Bank here in the U.S., but then sold that off, but he still had shares of Republic First Bank, and he became a major shareholder in Republic First, and then eventually took over, became chairman of the board, and then eventually replaced the CEO, who was a gentleman named Harry Madonna. Things were going well for a few years. Vernon had brought in did a $100 million capital raise. And the bank was, I don't even know if the bank might have been about 800 million in asset size when Vernon got involved. And then very quickly, I would say over the course of maybe like 3, 4, 5 year period of time, they had grown the bank up to probably about 5.6, 5.7 billion in assets. And, really we're building a number of branches, and Vernon Hill was following a lot of the same strategy that he had executed at Commerce Bank, which had made Commerce Bank such an incredibly successful bank. He brought in a lot of his ex-Commerce Bank executives that came in. So that, everything seemed to be going well, but then, things kind of started going sideways because the branch strategy that he had employed at Commerce didn't necessarily work quite the same way as it had, back in the 70s and 80s and 90s when, it was basically put a branch every 4.3 miles in the suburbs to create market penetration. And so, but to be fair, I mean, they were beefing up. They were making investments, at least it seemed, on, as far as like their website and mobile app and back-end technologies and trying to become a more, technology-driven financial institution. So that was certainly part of their strategy. But the real issue, I think, really kind of came in their bond portfolio, what they were doing on the investment side of the bank. And then what happened was their ROE and their ROA, two very critical metrics of your company's performance, they just absolutely tanked. And that basically kind of put Vernon on the hot seat. And then you had this basically giant board rebellion. And you had Harry Madonna, the previous CEO, who kind of got pushed out by Vernon. He was still on the board. So you had a board member who passed away, because there was 9 members of the board. So you had a board member pass away, and then you had basically Vernon on the one side with his three board members, and you had Harry on the other side with his 3 board members, and created this 4 versus 4 stalemate. But eventually what happened is Vernon eventually got, I'm sorry, I don't know if I said that right. One of the board members did die. I think what happened was somebody left the board, and eventually the stalemate got broken, and it became, I think, 4-3. And then Harry and his group basically forced Vernon out of the bank. So as all this is going on, you then had these other activist investors who were coming in and trying to get in. And one of them was this group, we'll call it the Norcross-Braca group, who we'll talk about in a second. And basically, in a fashion, they ended up winning out. So basically, Harry steps in, he becomes CEO of the bank and chairman again. But a lot of the investors, they didn't really care for that. So Harry stepped down from that. He's still on the board with a couple of with again some of the other board members, that were on his side. But now Um, the one activist investor, which was I think was the driver management, they got satisfied and kind of taken care of and went off to the side. And then but Norcross-Braca, they had kind of hatched this plan where they were going to invest $35 million in capital into the bank, and it was going to give them some seats on the board and some other things, and it looked like this might all work itself out. Now, in the meantime, while all this is going on, Republic First was not filing their financial statements, and they ended up getting delisted they were publicly traded, and they got delisted from the NASDAQ, and then they were trading in their stock in the over-the-counter market. So you had a lot of crazy things going on at one time, and it seemed like this soap opera was over until this week, and then boom, it all kind of blew up here in the last couple of days. So let's take a look at just a couple articles here real quick. So this is from S&P Capital Intelligence. This is Republic First facing fallout from latest recap termination. So it basically says the announcement of the termination put further pressure on Republic First stock as the share price closed down 58.33% from February 29th to $1.25 and has lost 99.4% of its value since the start of 2023. It's pretty crazy. The deteriorating financial situation raises the question of how long the FDIC would let the bank find a solution on its own while continuously logging losses, said David Larson, managing director at Artisan Advisors. I think you really have to wonder how much time will the FDIC allow them to continue to pursue a capital raise. Another challenge to raising additional capital is that the holding company has yet to file year-end financials for 2022 and 2023. Bank investors agreed that raising capital without current financial statements is difficult, and the lack of filing helps fuel speculation. What kind of speculation? We'll get into that in a second. Bradley Ritzler, managing director at Stroudsburg, PA-based Downrange Capital Management, said the outdated financials are a red flag that could lead to bigger issues, and noted how First NBC Bank delayed several filings in 2016 before falling apart in 2017. Norcross-Braca exiting the recap agreement also sends a troubling signal to the market since it had been actively involved in the bank. It looks like they are kind of cutting their losses. So when the Norcross-Braca Group announced the latest capital commitment, it came around the same time the FDIC was reportedly accepting bids on the bank in late October. The FDIC's reported participation also complicates matters for Republic First, especially if it were considering a sale process. The risk of failure, true or not, gives potential suitors little incentive to pay up if they believe that they could eventually take part in a government-assisted deal. In a deal for a bank that has not failed, buyers would need to mark the target's securities book to the market, as is a typical M&A accounting approach. Republic First's unrealized losses and thin capital base would drag down the capital ratio at the combined entity. And then this person goes on to say, you can't do this deal without assistance. This news is really going to cause the industry to kind of perk up and see what happens. So, and I'm going to flip over to this other article here for a minute. So here, because I'll get into, basically what just got announced basically today. So what could potentially be going on here? So you could just have a falling out, but you could also have some other issues here. I mean, again, what the article said, this could lead to speculation. Like, in other words, why haven't they filed their audited financial statements? I mean, this is basically a six now. I should say now they've gone in the last year or so. They've gotten their assets over $6 billion. So, a $6 billion asset bank, I mean, they can afford to hire a good law firm and a good accounting firm. And they do have a good accounting firm. I think they have. Republic First noted that it previously disclosed the hiring of Wolf & Company to replace Crowe as its auditor to help get the company current with annual and periodic financial reporting obligations for 22, 23, and 24. The bank said it believes that work is key for us and investors to considering opportunities for growth capital in the future. Yeah, I would say so. So, again, they have a good accounting firm. So what is taking so long? What is the problem here? Why can these guys not get their financials out there. I mean, it doesn't seem to me like they have a whole team. I'm sure they have an entire finance department. They've got a CFO, they got a controller, they've got a whole bunch of people there. So what's happening there? What is going on there? Is there some kind of fraud going on there? Is there insider trading or insider dealings going on there that we don't know about? Is that why Norcross-Braca decided to step away? So now, that being said, let's see what just got filed here today. So this article from the Philadelphia Business Journal says, after terminating $35 million planned investment, Norcross-Braca Group relaunches lawsuit against Republic First Bancorp. So just days after terminating its planned investment in Republic First Bancorp, an investment group led by South Jersey power broker George Norcross, former TD Bank US CEO Greg Braca, and Parker McKay, CEO of Philip Norcross, became activist again. The group said in a Securities and Exchange Commission filing on Friday that it had relaunched two separate lawsuits filed in Philadelphia Common Pleas Court last June, one against the bank and the other against board members, claiming breach of fiduciary duty. The suit claims the following: engaged in and approved self-dealing transactions, sought to entrench themselves at the expense of the company, engaged or authorized disastrous business strategies, including investment strategies without regard for and hedging to avoid the substantial risks to the company from rising interest rates. It's what I talked about with the bond portfolio. Refusing to entertain business opportunities, including the injection of much needed capital offered from the Norcross-Braca Group, which the plaintiffs claimed harmed the company. Made false and misleading statements in an effort to entrench themselves and gain control of the board majority, resulting in an investigation by the Wilmer Hale law firm and litigation for which the company incurred significant costs, expenses, and reputational harm. So Republic First said late Friday that it had no comment on the lawsuits. Many of the allegations stem from the board's oversight of the Republic First when Vernon Hill, chairman and CEO prior to his August 2022 resignation. For example, Hill was accused of insider dealings, an accusation that he denies. And I do believe he himself has a lawsuit against the bank and the board of directors. So the Norcross-Braca Group, they first acquired nearly 10% of the bank stock in February of 2022. It waged a proxy battle against Hill until he resigned due to losing a power struggle with the board of directors. The group then continued the proxy challenge against the board, led by bank co-founder Harry Madonna and board members Lisa Jacobs, Andrew Cohen, and Harris Wildstein. The investment group and the bank reached a truce last October, but that has since fallen apart. And then yada, 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 it goes on, blah, blah, blah. But the point being is that now the lawsuits are flying, and like I said, this since 2022, for, going on what, easy 2 years now, this has been one of has been played out as got to be one of the best soap operas in the banking world over the last 2 years. Just the constant ups and downs and twists and turns of this story. The board member infighting, the getting delisted, can't get the financials done. Raising capital, not raising capital, investor lawsuits all over the place. What's going on? What's happening? These board members are fighting with these board members. This board member suing this people. Like it's crazy. It's a very entertaining story. But like I said, I mean, we'll keep an eye on this one and see what happens here and how this continues to play out. I'm sure that there will be more news coming with this in the next couple of weeks because, Republic First they're in a pickle. I mean, they're in a tough spot where, it's not going to be easy for them to maneuver around this. They're going to have to make some very hard decisions. And I would think that if they want to basically save this bank, they're going to have to get those financial statements out and produced right quick, and then see if they can somehow magically convince some investment bank or, to help them raise capital real quick and either get an infusion, maybe private equity money, or some other investor groups or whatever. But yeah, I mean, they just seem to be at, total and complete odds with the Norcross-Braca Group at this point. So, but who knows? But this has been a crazy story since the start. So we'll see what happens, but we'll keep an eye on it. and I will, certainly let you guys know what happens with that in the future. But if you like this episode, please make sure to like and subscribe and share. It always helps the channel. And please make sure to leave your comments down below. I'd be happy to try to get back to anybody that has questions or thoughts on this one. And please come back and check out some of my other episodes, and I'll get back to everybody again real soon. Thanks a lot.